So hello and welcome to only the second episode of our brand new podcast series called j.allan MarTech. On the pods, as some of you will already know, we talk with founders and leaders from some of the most exciting startup and scale-up MarTech and ad tech businesses today. And I'm thrilled to be joined by Carsten Frien, CEO and founder of Roq.ad. So Carsten, first and foremost, welcome to this podcast and thank you so much for joining us. How are you doing today?
Jacob, thank you very much for the kind introduction. Looking forward to our session today.
Fantastic. No, it's a pleasure. It's a pleasure to host you. So look, we'll get straight into it as a starting point. And for listeners who may not be familiar, can you please give me a brief introduction on yourself and just a brief intro on Roq.ad as well? We'll get into sort of some of the more detailed pieces around Roq.ad and your mission. But yeah, a brief intro to kick us off would be fantastic.
Of course. I'm Carsten. I'm 50 years old now, and so I've been in the business of building venture capital and private equity-backed companies for the last 20 plus years. Originally, I started studying economics in Hamburg in Germany, and while being at the university, I started my first two internet-based startups more than almost 30 years ago. So in the very early days of the commercial internet. That taught me a number of very useful lessons early on in my entrepreneurial life. Then I spent some time in a startup in sort of the first dot-com bubble, 1999, 2000, 2001, 2002, which was headquartered in London. Then I had a 3.5-year stint at the largest media conglomerate on the planet, AOL Time Warner at the time. And then a couple of years later, I returned here to my home city, Berlin, where I started building venture capital-backed edtech and MarTech companies.
Fantastic. We'll get into some more detail on that journey. There's a few things we'd like to pick your brains on. So moving on to that topic, you touched on sort of what this career journey has looked like. It sounds like you always had some entrepreneurial spirit, having started some businesses whilst you were at uni. But yeah, I guess, has your sort of path been fairly linear? Has it followed the route that you thought it would? Or what has taken you to where you are today, if that wasn't the original plan?
So originally, when I started going to uni 30 years ago, that was before the first dot-com bubble and before internet and technology companies were on vogue. I had the ambition to join a top strategy consulting firm or an investment bank. That was what most of my fellow economic students would try to achieve. And I did an internship at one of the top consulting firms when I was 22, 23. And then I realized that that's not my path. I'd much rather start a entrepreneurial career. So that's why I founded those two relatively small internet-based companies while being at the university. One was a digital agency, the other one was a digital publisher. But that was sort of in the late 90s. And back then it was incredibly hard and expensive to scale technology startups. I was still a bit green behind the ears, as we say here in German. And so I didn't have the tool set to really set my companies up for success. And then I realized that startups are super interesting, and they joined one that was well-funded out of London. It was a mobile commerce and mobile ticketing startup. That one crashed pretty quickly after the dot-com bubble burst, and we ran out of money, and we had to do a fire sale, I think in 2002. And then I was thinking, okay, Carsten, what do you do next? Startup land was not so easy to execute back then, and that's when I decided to join AOL Time Warner. First here in Germany and then in London, their European headquarter in a corporate development role. But again, after being there for about 3.5 years, I realized if you're just a very small piece of 100,000 people organization, then you really feel that. You have 10 layers of management above you. That was, at least for me personally, not so fulfilling. So I wanted to get back into startup land. And then I always wanted to live here in Berlin. So I canceled my job in London, packed up my things, moved to Berlin in 2008, just after the financial crisis. And looked at interesting business models, started connecting with some of the leading early stage investors here on the ground in the Berlin scene at that point. And we got my first venture off the ground, Madvertise, which I co-founded in 2009 and was running as CEO for the next 4 years.
Fantastic. And what was the journey like, just briefly, with Madvertise? I know that you sort of lived through a few different guises. So yeah, talk us through what happened with that over that 6-year period.
Well, it was a 4-year period, but while I was CEO, and then I transitioned into the board as a board member of the Madvertise. But the first 4 years was really building from scratch, taking the idea, raising the first capital, putting together the first leadership and operational team, raising a seed round, followed by an A round from leading German venture capitalists, and then expanding our business internationally into the UK, France, Italy, Spain. We acquired a business in the Turkish market, and then we went over to the US to do fundraising on Sand Road, and raised a B and a C round from very prominent US investors at the time. Scaled the team to about 100 full-time employees and about 20 million in the revenue run rate. So that was my first success as an entrepreneur with the venture capital backing.
Fantastic. And just briefly, how did that journey finish? What was the end to that story?
We hired an experienced technology CEO out of Silicon Valley to take over the helm. I transitioned into the board, and that experienced CEO then continued to run the business. He merged it with another company. That company was listed on the Paris Stock Exchange. So that was the one part of the business. The other part, he decided to merge with another piece of the business of some other companies, and then there was a trade sale to a much larger technology group. So that took a positive end for everyone involved.
Mm-hmm. Yeah, fantastic. And you guys were a mobile DSP, a mobile ad network, is that right?
Yes, correct. So the first iPhone was launched after we just launched our business, and mobile usage was exploding. Monetization strategies for mobile were still evolving at that point, and we decided to build essentially a marketplace, an ad network, bringing together supply and demand in one platform, enabling publishing houses and independent publishers and app developers to use advertising as their main monetization stream. So that was working really well for a number of years. And We were at the forefront of innovation back then. Some similar companies existed in the US, but here in Europe, it was really a novelty.
Yeah, absolutely. That's what I was going to ask, actually. You already answered the question, but today when I think about the DSP market, right, it's like relatively saturated. But back at that point in time, as you said, you would have been at the forefront of innovation. And it sounds like great timing with the launch of the iPhone and the launch of your mobile DSP and ad network. So I assume there was some planning involved in that, and probably wasn't just complete luck.
That's correct. Obviously, the DSP category existed at that point, and there were some great desktop DSPs like Brian O'Kelly, AppNexus at that point, then Xandr, now Microsoft Advertising, AdForm started getting some traction, and some others. But they were very much focused on the larger portion of the market, the desktop market. So we decided to do a mobile-only approach, really capitalizing on the explosive growth of smartphones, smartphone usage, especially iPhone, but then obviously many other manufacturers launched very strong smartphone devices. So it quickly became a multi-platform play across the different operating systems.
Yeah, fascinating, particularly for someone like me who wasn't involved in this world at that time, right? I always like speaking to folks such as yourself to get a feel for what that was like, because there's been a lot of changes in the industry even since I've been involved, but nothing like what it looked like back then versus now. So no, thanks for sharing that with us. So let's fast forward a little bit to present day and Roq.ad, and can you talk to us, Carsten, a bit more about the company and your mission?
Of course. So Roq.ad is a global identity data business. Our unique differentiator is our focus on being 100% privacy compliant in any jurisdiction and geography we operate in. Currently, our products are live across Europe and across North America. And we have concrete plans and ambitions to launch our products into APAC and LATAM next year. But let's talk a bit more about the today. So we are squarely focused on North America and Europe with our privacy first, privacy by design, we call it internally, approach to deliver identity data and data onboarding solutions to our enterprise customers.
Fantastic. And what prompted you to begin the journey with Roq.ad? I assume it's informed by your career to that point, quite a few changes in the industry, which you were probably aware of, that there was things coming that would create an appetite for what you guys are doing. But yeah, I guess what was the motivation for it? And I can certainly see why you guys are needed in the space right now, but can you talk to that a little bit yourself?
Of course. So when we started and scaled Madvertise, the ad network that then morphed into a mobile DSP, we realized that targeting and analytics across apps and mobile websites just on one single device was very hard to do. So if you had the BBC app on your phone, and if you were reading the BBC mobile website on your phone, those were technically two very different things you would be doing, and just tracking a user moving from the BBC app into the BBC website and back was tricky. And then hardware got prices started dropping. People started using more different hardware devices. So they would have, at that point, maybe still a desktop PC and then a laptop and then a smartphone. And then the tablets came around and then smartwatches, connected gaming consoles. So the number of devices you have as an individual, and also the number of devices that you have in your household was increasing significantly. So today, it's not atypical that an individual has maybe 5 different digital devices. And if you're living in a traditional family household, maybe you have up to 20 devices. And being able to track consumers across those 20 devices and to deliver more meaningful, more relevant, more tailored advertising and to deliver the underlying data to achieve that. That to me sounded like a very good niche in the market to get Roq.ad going. And at the same time, it was clear to me that it needed to happen in a privacy compliant and privacy safe manner. I'm German. All my previous companies, I started here out of Germany. We always had very strict data privacy regulation. So I'm a bit of an expert and a nerd when it comes to privacy and data privacy and consumer privacy, not only here in Germany, but also in Europe and North America. So it was clear to me that if I wanted to be successful as an entrepreneur here in Germany, I needed to be 110% privacy compliant. And then I analyzed the market and thought, how is this space going to develop over the next 5 years? And my assumption when I started Roq.ad was that the German model will be copied and exported into other countries and geographies. And that's exactly what happened some 6 years ago. GDPR was rolled out across Europe. And it was essentially a one-on-one copy of the German law rolled out across Europe. It had some slight modifications, but essentially the German approach was adopted across Europe. And now we are seeing that the European model is being exported globally. So in the US, certain states are following the European model to a certain extent, or at least moving into that direction. We are seeing similar movements in Canada and Brazil and Japan and Australia, India. So our product that we built here at Roq.ad was already privacy compliant in Germany, and so we have a competitive advantage versus all the others in the space that are building that from the US or from Asia or from Israel, and do not have the privacy and the need to be privacy compliant baked into their DNA and product.
Yeah, fascinating. And do you, with regards to North America, do you foresee North America or parts of North America going all the way in terms of the way that Germany and other parts of Europe have? Do you think that what exists now in terms of that privacy environment in the US, do you think that's going to continue to evolve?
So number one, for sure, it's going to continue to evolve. Number two, we think that it's likely that the US and other countries will adopt the European model. There may be variations about the kind of the data points that are classified as the PII, personal identifiable information, and that fall under the regulation. But broadly speaking, we are thinking the world is becoming more privacy sensitive, more privacy focused. If you stopped 100 people on the high street maybe 5 years ago and asked them about privacy, probably only a handful of those would have been able to give you a meaningful answer. If you do the same today, then most digitally savvy people understand that by using the large walled gardens, the Google email or an Apple product or a certain Amazon product, that they are the product. So they are handing over their data to the walled gardens. In return, they're getting free of charge email, free of charge WhatsApp, free of charge pictures, free of charge whatever. So that's the value exchange, data against product. So consumers, broadly speaking, are more educated about that value exchange, and they demand and request more privacy. So if a consumer is buying products from British Airways or Procter and Gamble or Unilever or Mars or any insurance product, then they demand so that those brands take their privacy serious, and that they only work with the service providers that take their privacy serious. So that's why we've been so successful in the European and also in the North American market.
Mm-hmm. Yeah, fascinating. I've got a friend that works for the ICO in the UK, the Information Commissioner's Office, which you might be familiar
Yeah.
with. And because I do a lot of work in the ad tech space in the US, of course, I've talked to him about some of the tools, some of the technologies that I'm working with. He's almost, he's lives in his sort of bubble of the UK ICO world. He's always totally amazed about, some of the technologies that are out there and etc. And what is able to be done in the States. So it'll be interesting, as you say, as we get closer to that European model being rolled out, how things evolve. And I can certainly see that you're in a good place to cater for that in North America.
Yes, we are excited about the North American market. We shifted our headquarter from Europe into the US about 4.5 years ago. So legally, we're a US headquartered business, obviously with subsidiaries here in the UK and Germany to legally run our businesses here on the ground in Europe. But the US obviously is a large and rich and fast-growing market, advertising market, and data market. So we're very bullish about the North American market. Most of our shareholders today come out of Bay Area, New York, Miami, Chicago. So we're truly a North American and European business with the ambition to actually also enter APAC and LATAM next year.
Mm-hmm. Yeah, fascinating, great stuff, exciting times. So let's move away from Roq.ad a little bit in part, and I wanted to get your take on navigating funding rounds, Carsten. So what are sort of 2 or 3 key pieces of advice you would share with founders who are currently pitching for and navigating funding rounds? That would be great to get your take on that, actually, being somebody that's been heavily involved for a long time now.
Yes, of course. I would argue, and that might be surprising, that not so much changed over the last 10, 15 years. At the end of the day, you need to do 3 things to be successful when fundraising. So number one, and it may sound boring, you need to do your homework. You need to research who are the investors that are broadly investing in your space, and make sure that you have a good overview and that you're talking and to the right potential investors. And our business model is enterprise SaaS, software as a service. That's how we license our product. And that's a very large part of the market, SaaS investors. And then obviously there's different stages, A, B, C, D, E, F, G, around investors. So do your homework and make sure you find the right ones that are interested in your vertical, in your space, and in your development stage of your company. And luckily, there's a lot of tools out there, a lot of websites, a lot of resources where you can find that information. So it's really a matter of a couple of days work researching and getting your ducks in a row there. And then second piece of advice, and that might sound a bit counterintuitive to the first one, where I said sort of do your research and really only focus on your sector. But then once you have that target list, then go relatively broad, because investors and their websites and their communication, it's very similar. So they all say they add a ton of value. They all say they obviously have money. They all say they're founder friendly. They all say they have the best network for you to raise your next funding round, for you to hire the best talent, to find the best advisors, the best board members. For VC, it's really hard to differentiate because there's so much money out there. So they all sort of play along the 4 or 5 USPs that I mentioned. And even though they may claim on their website that they're in business and that they have liquidity and that they want to do deals, that may be accurate, but there may be a bunch of reasons why, for the moment, that's not accurate. And so a second piece of advice is go relatively broad. Talk to 100 or 150 or 200 potential investors. Don't focus on 5 or 10 because unless you have true insider knowledge and you've worked with them previously and okay, I want this investor and this partner on my board, you need to go relatively broad because quite a few will drop out for a number of reasons. They're out of money, they need to raise a new fund, they don't like a certain nuance of your business model, they don't like your cap table, they don't like the way you set up the business. So there's many reasons why someone, even though you're building a great business, might not be a good fit for you. Then the third piece of advice is run it like a sales funnel. I'm always telling my teams, especially my sales teams, guys, you are selling our product. You need to build a funnel, top of funnel, middle of the funnel, bottom of the funnel, different strategies for different stages in the funnel until you get to a yes and a signature from the customer. Then the output is one new customer and a new enterprise license contract, in our case, for the product we are licensing. And I'm essentially doing the same as the CEO. I'm running the funnel with all of the investors, and I'm not selling a product, but I'm selling company shares. But the tool I'm using is actually Salesforce, our CRM system, what our entire sales and marketing team is also using to drive our sales funnel. I'm using the same tool to drive our investor funnel. And then as a result, I have a signed shareholder agreement where I'm selling X% of the company to an investor or a group of investors. So those would be my 3 pieces of advice. Do your homework, go broad, and manage it like a proper sales funnel.
Fantastic. Thank you so much. So on the subject of scaling and building a business, one thing that is very true in my line of work is that the people will influence a huge portion of your success. Obviously, my day job is recruitment, and that's what I hear from founders over and over again, that particularly at those early stages, the quality of people is just so important. So what is your advice on growing teams, and what are your thoughts on sort of, I guess, how important it is to get that right?
Let's start with the second part of your question, and it's probably obvious that you need the best talent and the best team to build the best company. Most companies today are in global competition, at least they're technology companies. So you need to be not only the best in Germany or Europe, but you need to be the best one globally because your enterprise customers are also looking at suppliers from Asia, from the North American market, from the European market when making a licensing decision. So you need to beat those global teams. So you really need to build a world champion. Otherwise, you end up in the number 2 or number 3 spot. And that's obviously nothing that you want to do. So you need the best possible team. However, you can either hire for skill or for ambition, to oversimplify it a little bit. Very rarely you find someone who is incredibly skilled and incredibly motivated and ambitious and willing to learn at the same time. And if you have to sacrifice one or the other, then I would always go for the ambitious and hungry and willing to learn individual versus someone who is incredibly qualified, but is maybe lacking ambition and willingness to win. So that is sort of my number one advice. We're also following here at Roq.ad that we give younger and hungry and ambitious people a chance to join us relatively early in their career, and then help them grow internally and be really successful, typically through a number of promotions internally to become an expert at some point in the career path that they've chosen.
Yeah, fantastic. That's really interesting, and I think that feeds into also hiring people that are ready or interested in being involved in the world of a startup, right? Because that person is probably quite different to the person who's working in a more developed, more mature business, and it might be to do with their stage of life. But yeah, you probably need that ambition and scrappiness alongside some intelligence to be able to put in what's necessary.
Yes, totally. And typically candidates coming from very large established organizations that are not moving so quickly, that have a lot of established processes, are typically not a good fit for early stage and mid-stage startups. Once you're a true scale up and you're post 500 or post 1,000, employees, then that changes a bit, and you also need some very experienced people that can bring that level of maturity to your business and help set up those additional processes. But sort of in an early stage land between 0 and 100, maybe 500 employees, you certainly need the other type. Otherwise, I've seen it happen over and over that it doesn't work out. There's not a good fit, and the hire turns out not to work out, and then you need to quickly split with him or her again.
Mm-hmm. Yeah, no, makes sense, and that's good advice for folk that haven't thought about that. Okay, so moving on to sort of last portion in this podcast. We have a question for you from our last guest, so that'll be a feature of the pod moving forwards. Carsten, I know you'll be sharing a question with me for our next guest next week also. But for you, Carsten, we have a question from Michael, who's the CEO and founder of MParticle, based over in New York at CDP. So Michael asks, Carsten, what have you learned about creating a system where the whole is greater than the sum of its parts?
Yes, great question. And I think it comes down to the core of entrepreneurship, the traditional way we've done entrepreneurship in the technology sector in the last 20, 30, 40 years. You essentially need 3 ingredients. You need the idea. You need a certain amount of capital, and you need then a world-class team. We described what the characteristics should be a couple of minutes ago. And if you bring those 3 things together, the idea, the capital, and the team, then you can create beautiful and really valuable things. The idea on its own is almost worthless, because if you're not implementing it, then what's a good idea? I meet many dreamers that tell me, oh, wouldn't it be great if we do this or that and that? And then I tell them, yeah, great, do it. If you're convinced it's a great idea. And similar with the capital, if you can't deploy the capital as an investor, then it's just sitting on your bank account, probably earning negative interest, or maybe just close to nothing. If you're a bunch of people, but you don't have a good mission and a good cause and a good idea to stick your teeth into, again, you're not going to build something fantastic. So bringing those three things together, the idea, the people, and the capital, that makes then 1 + 1 + 1 certainly is more than 3, and so you can build something truly exciting and meaningful. Little caveat, there's some discussion in Silicon Valley. Sam Altman discussed it a couple of weeks ago, saying he's expecting the first $1 trillion market cap business from a one-man show. So yes, it's true. Cost of starting a business is going down. Cost of running a business is going down. And with Gen AI, there's a lot of opportunities on the table where even as a solo founder, you may be able to achieve a lot. But I think the norm and what we are seeing for 99% of the companies is you still need some capital and a team to build a world-class product, and then out of the world-class product, build a world-class business.
Fascinating. And yeah, I mean, it's exciting to hear from you as somebody who's done that before, bringing those three parts together, sort of that you are still passionate about that rings true for you, and yeah, creating a force that's more than three, as you said. And also, yeah, I heard a similar thing about the one man sort of, I think you said $1 trillion or whatever it was, business. I mean, I think, yeah, we're getting close to that. If that happens, I'll be amazed. Not that I'm an expert, but just, from the outside looking in. But yeah, let's see. I like your caveat there, and we'll check back in a few years and see which lucky individual executed that.
Yes, it's going to be fascinating to see if it becomes a reality, or if it's even if it's $100 million market cap business as a one-man show. That would be obviously a financially life-changing event for that individual if he finds a buyer for it at that valuation. But I'm excited to be part of the industry and to witness those developments firsthand.
Yeah, absolutely. Likewise. So look, to finish up, Carsten, what should people be looking out for when it comes to Roq.ad, sort of finishing up this year and going into next? I did see that you guys, I'll give you a sort of bit of a shout out here. I saw that you guys were actually named as a finalist in the Ad Exchanger Awards for Best Identity Technology. So that's something that's happened recently that people should be aware of and take note of. But yeah, what else are you guys up to? Any events or anything that you're going to over the next quarter or two?
Thank you for calling out that nomination. There was another very prominent trade show nomination a couple of months back in Miami called The Possible, and there we also won the top one prize for the most innovative identity technology globally. So we're very pleased that not only Ad Exchanger, but also the Possible trade show and their organizers and their judges recognized Roq.ad as a leading player in the space. We'll be on the conference circus over the next weeks. In 2 weeks' time, there's Demexco here in Cologne, one of Europe's largest digital marketing conferences. And then a week later, there's a Programmatic I/O in New York, a very relevant trade show conference in New York City, end of September. So the team and I will be at those set of conferences. We are gearing up for some very interesting M&A discussions. So we're not only growing our business organically through the expansion plans I laid out here into APAC and LATAM, but we are also looking at growing the business inorganically through adding certain capabilities and products and teams through M&A. So stay tuned for some more good and exciting news to come from the Roq.ad team over the next half a year.
Fantastic. We will do so. A busy but exciting period on the horizon for you. You're not giving yourself much of a break.
Well, Jacob, thank you very much for running this podcast. I really enjoyed it. Thank you very much for organizing it. And to everyone out there, continue building, don't stop hustling, and then eventually you'll be successful.
Yeah, fantastic. Thanks so much for joining us, Carsten. It's been a pleasure.
Thank you. Bye-bye.
Bye-bye.